think a lot of the private banking industry over the last 10 years or 15 years that have been around the region got distracted in trying to be everything to everyone, which is extremely expensive from a capital standpoint, from a distribution standpoint, from a space and people standpoint. And as such, a large number of them were unable to be profitable as a private banking without having the investment banking generating the products behind.
Is technology going to replace bankers? Our view is not in the near term, if at all. It remains a relationship business. It remains a consultative business. Clients may have their own views. They would like to exercise that view through maybe some DIY channels, but there are complexity to the business that you will, at the end, they would like to consult somebody. You want to see whether your view is being echoed by financial institutions. And so we'll see technology going hand in hand with this relationship building that will no doubt be the core of wealth management and private banking going forward.
You have to build platforms, and your platforms have to connect, and your clients are demanding instant access. And beyond data, they're asking, the next step is analysis and recommendation and advice based on those. So clearly, wealth managers and large banks, large financial institutions are making massive investments into technology platforms.
There's a couple of things that need to happen, right? One is that banks need to be open to the new ideas that we see from fintech, because no one has a monopoly on innovation, right? And so there's a great opportunity to benefit from that. But I think it's a win-win, as Jeffrey said. I think banks can help fintech get to market faster and at scale and in a compliant way. We have the capabilities around compliance, the capabilities around our platform that allow us to embed some of these ideas and allow them to get to market. But on the other side, I think it does require banks to modernize in terms of the way they think and the way they operate. And I think all of us who are sort of active in this space are taking a very different approach to the way that we ideate and the way that we build technology. And so the co-creation of technology with clients is absolutely critical to the way we operate. We have a whole team that focuses on that.
The change is going to not come from the banks. I think the change is going to come from the periphery of the financial services business. It's going to come from, I think like Paul said in the earlier session, our competitors and the people are not even financial people. They come from the technology space.
On the high net worth individual space, is capital creation. It's mainly in the emerging markets where we are seeing much more ultra high net worth individuals going into that space. If Latin America, I'm seeing that the main investments, that's true, has been real estate, private equity, and the more and more the clients, they are moving into infrastructure. By the way, Latin America in that sense is much more advanced than in Asia, because the governments, they are putting much more money in infrastructure. You call it in Brazil, in Chile, in Mexico, then that's where the money is coming from, the ultra high net worth individuals. Here in Asia is going to come all the projects that China has as the One Belt, One Road, or India, or we're seeing as well in Indonesia, is something that is going to attract and will be a very interesting asset class to go.
A typical Asian family would have roughly close to about 30 to 35% of their total asset here is actually anchored in properties. Mm-hmm. Right? Mm-hmm. Then you have another about 30% of that in your strategic holdings, where it can be listed or it can be something where they derive that wealth from. And then you have got the other portion, very small portion would actually be investable in, so to speak, your cash investment assets, but then some will be locked into other form of assets where they invest into indirect companies and so forth.
It's difficult today to have a very simple product. I think you need to, the ETF are gaining because you say on each asset class it's difficult to beat, but what is really adding value is the thematic views, because they are linked to a real, I don't know, if you know a certain culture, a certain need. They are asset allocation needs, and they are tailor-made needs. And that is what private banking needs to do today to go to this specific needs of the families. You need to build a benchmark, or you need to build an approach for each key clients that you have. I never saw a single client telling me my benchmark is S&P 500. My benchmark is what I will do with my family, and that's what we need to be able to do. I'm sure he will never speak to his robot about this. That's a chance for the private bank. And I think we need to be able to assemble, and again, I completely agree on the fact that advisory is the future of the private bank, because it cannot be replaced, because it's really something that is a face-to-face discussion.
On the private equity side, more and more clients are interested in investing in more yield-driven type of strategy. Given if you put money in the equity market now, only if you can time the market well, you will be able to make quite a lot of return.
Our view really is that the key challenge that a private investor has today is that we are in a low return, high volatility world where tail risks abound. So the question that we've got to ask ourselves is that how should one position a portfolio for growth as well as for safety?